right, good morning, good evening, good night. Another Layer 1 podcast, another phenomenal guest, another great episode we have here in front of us. I cannot wait to get to this one. I had Jesse Proudman on, I believe, almost a year ago at this time. At the time, he was talking about his quant fund, Strix Leviathan, but we're going to talk about a brand new product that he's rolling out. Jesse, you have a phenomenal Seattle background behind you, man. How are you doing today?
It's a beautiful day here in Seattle. Couldn't be happier.
Awesome, man. Yeah, I got my co-founder. I was just talking to you. My co-founder's probably somewhere in the vicinity behind you. You said you had a quick bike trip, man. How did that go?
Yeah, well, try to get a little exercise before the day starts, and normally just in the basement on a Peloton. But today I figured I'd hop on the actual bike and do a little spin around town. It was just stunning out this morning.
Absolutely, man. Yeah, you've got a phenomenal view there. So we're going to touch on Makara. We're going to touch on smart crypto investing via these robo-advisors, these different portfolios. I do want to touch on Octopus and Strix Leviathan as well, and kind of your background, because you have an awesome way of telling stories about how you guys created all your products. So I guess since last time, since 2020 at this point, I mean, it's been COVID, it's been crypto bull run, all of this stuff bundled into one. How have you been doing, and how has Strix Leviathan been doing in that time?
Yeah, I mean, it feels like it's been 40 years and it's been one. We've had just a phenomenal time over the last year. So Strix, just for everybody's context, it's a quantitative hedge fund. We launched it in January of 2018. I spent the year prior at IBM as a distinguished engineer and entrepreneur in residence, really focused on the crypto markets. So in 2017, my job was to research this space, which was a phenomenal time to be paid to do that. And then personally, I had taken a little bit of money in 2017 and turned it into a ton of money, and then back to a little bit of money. It's like, this is awful. Like, there has to be a better way to invest in this space. There's so much opportunity, but like the market cycles are so intense. And it's really like more than anything else, it was the psychological toll that whole process sort of told on me. And it felt like there had to be a better way. And so from all of the research I'd done at IBM, I formed this thesis around these markets. And really the thesis is that these markets they have opaque fundamental value, right? So the reason I believe Bitcoin is worth something and the reason you believe Bitcoin was worth something, probably very different. The valuation models that exist here, like, they're not shared amongst market participants. And so as a result, the price action, it's fear and greed. Fear and greed move these markets. And fear and greed are behaviors, and felt like behaviors could be identified in repeatable patterns in the price data. And so the Strix thesis was, let's build algorithms to identify those patterns and trade off of those. Not necessarily an objective to beat any particular index, but with the objective of a better risk-adjusted return, right? Like, I didn't want to go through that same stress cycle that I went through personally in 2017. I wanted to control drawdown. I wanted to control sort of what that aggregate experience felt like. And so our focus has been on, you can think of it as defensive crypto. Yep. Like, I'm happy capturing 50, 60% of the upside in these markets. And then as the market cycle changes, you capture 0 to 20% of the downside, and that aggregate experience just feels healthier to me.
Yeah.
So that was the genesis. And then we started out to go do that. We realized, holy moly, like, the software in this space is terrible. Like, there is no infrastructure for anybody that really wants to do that on a professional scale, sort of with an operational fund, with all the additional pieces that are needed to run a fund. Like, there's plenty of trading tools for individuals. Like, that market's been solved, and it's neat to see all that technology exist. But for true institutions, particularly in 2018, like, there was nothing. And so we went and we built this whole software stack we call Octopus, and it does literally end-to-end everything that you would need to run a fund, from data ingestion, normalization, storage, strategy development, running the actual portfolio, order execution, reconciliation, settlement, and then we like LP accounting, literally everything, because all of these pieces are hard individually, and then having them as sort of disparate software pieces that you go and you buy off the market or cobble together on your own, like, it doesn't work. And so that was like our first wake up call. Like, okay, this idea seems reasonable and achievable, but holy moly, we got to go build all this other stuff first. And that was the last 3 years. Like,
Yeah.
we're finally there.
All wrapped up into one, and I'm super interested in this flow of how you made it from, and in Strix Leviathan still an actively managed obviously fund. Octopus is live. You guys are still doing these two different entities here and these products, but I'm interested in the flow from like institutional grade, like quant fund where you're taking in LPs and all these things and making your way now to retail and offering this app to retail investors. That's an interesting model. The fact that you got there, I'm wondering, how did you get to that point of saying, hey, we have Strix, we have this trading platform and tools, let's go to retail and let's help the little guy out.
Yeah, absolutely. So first of all, like the regulation of the space, that was always a bit of a shock to me when I started 3 years ago. You sort of, I had thought you would take common sense and apply it here. The objective is investor protection, and I'm all for that. So you take some common sense investor protection measures, and you're in good shape. And I was woefully underprepared for the reality of what the regulatory landscape looks like. So Strix is doing phenomenally well. Like the team there, we've now got a quantitative team of about 6 folks working full time on the fund and its algorithms and all the trading infrastructure. The business is operationally profitable. It's doing spectacular, and we're really proud of that. It's hard. Most hedge funds fail, and so to make it 3.5 years into this endeavor and to be successful and to be growing with such a great team, like it is a special feeling, and particularly in this space, right? And like 2020 was the year of destruction for many quant funds in crypto, particularly March of 2020. So to have kind of weathered that year and come out in the position that we're in, we just feel so great. But it's at the end of the day. So the rate.
I want to hit on this, Jesse, because you have such a phenomenal background. You touched on it right there, and I March 2020. You were running a quant fund. In many ways, what happened in 2020 was kind of the perfect storm of what you were trying to avoid, and by setting up the quant fund defensive strategy. You mentioned this. What was that day like for you and the team and the fund? I know you can't talk performance, but I want to hit it.
Yeah, it was wild. So we actually, if you go back to January of 20, the markets were on a tear. We had one of our best months in January 20. And then that carried on through the first couple of weeks of February. And our fund and its strategies, we will go long, short, depending on what's going on in the market conditions. So sort of mid-February, the algorithm started to sense and detect some weakness in the markets and started to transition us from full exposure long into sort of partial long cash, and then ended up moving into a short position towards the end of the month. And so moving into March 12th, we were actually net short, and we actually, I think 40 or 50% net short on that day. Obviously, the markets had exhibited quite a bit of weakness at the beginning of the month. And we had, it's just, you never know what's going to happen with these markets. After hours, like everything just starts to fall apart. And I remember kind of sitting there watching on BitMEX. And a fascinating part of our technology stack is that we're streaming data off of these exchanges all in real time. And so we're able to start to see when some of these exchanges have problems, like the feeds cut out or data slows down. And we're starting to see all these issues from the feeds. And then we're starting to see sort of price disparities between all the exchanges. And that's when you start to see sort of price disparities between Coinbase and Kraken and Binance. And that's when you know that something really weird is beginning to happen in these markets. And these weren't, $50, $60, $70 price disparities on Bitcoin. These were $500, $600 disparities at the time. Just unbelievable stuff. So we're sitting there scratching our head, trying to figure out what's happening, and then watching kind of BitMEX fall apart in real time. It's just a wild scene. For us, I think we've always sort of, to some extent, protected ourselves from these tails. And I think a lot of crypto funds, particularly through 2018 and 2019, the marketing pitch was, we will be market neutral. We will print, nice 30 to 90% annualized returns. And it's low risk. It's decorrelated from the broader crypto markets. And the challenge with all of those strategies is that you're picking up pennies in front of a bulldozer. Like at the end of the day, and those funds, they had phenomenal returns, for years. And then all of a sudden that bulldozer, shifts up a gear and now it's on top of you. These markets change so quickly. It's a challenge. So I think if I remember right that night, literally it feels like it's 3 decades ago now with the pace this moves, but we went to bed, and then Anthony from Ikigai, he's the CEO of Ikigai, another crypto fund. We're pretty good friends. He called me, I think, at 3 a.m. and said, you got to wake up and see this. And we were just back at it. Like, this is a 24/7 industry, and the craziest stuff always happens after hours. Like, that's the most fascinating part about that whole experience for me.
Yeah, so you guys have this product now, Makara, that we're going to kind of delve into, and basically it's bringing all the experience, all the knowledge. There's some points of education that you want to hit on with these investors, and you're trying to bring that to kind of the everyday investor. You guys have the SEC approval there as well. You've got the Robo-Advisor stuff. So I kind of want to break down the Makara as an entire product, but really you're coming from the standpoint of saying, we have all this experience in institutional kind of the institutional environment. Let's bring that and really help out the daily investor, at least how I see it.
Yeah, absolutely. So just touching back on the regulation piece, right? To get Strix set up, we ended up needing to be what's called a 3C7 exempt reporting advisor. So that means that our clients need to be considered qualified purchasers, which is effectively 5 million in investable assets and up. So these are phenomenally wealthy people, the high net worth individuals. They're typically business folks who have sold their business. We have great LPs. We love our LPs. We've always wanted to do something broader that can help sort of a bigger audience than that. And that's where kind of the regulatory piece was always a surprise to me. Like, we'd been operating under the thesis that we're making this asset class safer to people. Like, that was our objective. And yet we're limited to sort of who we can help in the construct of hedge funds. So from the day we founded the company and sort of begin to figure that out, it was always our objective to try to come up with a regulatory solution that allows us to really touch a broader audience and to help more people. And so over the last 3 years, we've had so many conversations where the people basically have expressed a desire to participate in this space, but they're standing on the sidelines because the space it's too intimidating. Like, everything about this space moves a mile a minute. Everything is named exactly the same thing. It's always bizarro names and a whole different lexicon that you've got to learn. And for everyday investors, like, it's too hard. It's just too hard to get involved. And so even though we've got plenty of exchanges that have popped up, and like buying Bitcoin or buying assets in this asset class is no longer as difficult as it was 3 years ago, if you don't know what you're buying, you're not better off. Like, there was a CNBC article that came out 2 or 3 weeks ago that basically said 1/3 of crypto investors today have no idea what they're actually purchasing. And like, that makes my heart hurt. Like, it's terrifying, because at the end of the day, this entire asset class, it's early stage angel investing. It's liquid angel investing. These are all experimental projects, experimental technology, and the retail investors have an opportunity to participate in that investment in a way that they've not had in traditional angel investment or other early stage tech investing. But you need to know what you're doing and what you're buying and how you're participating in these networks. And so we wanted to solve that at Strix, but we wanted to solve that more broadly for the retail public with Makara. And so in the summer of 20, we spent a bunch of energy trying to think through different ways that we could do that. And we finally came to this recognition that there was an opportunity to use the SEC's registered investment advisor license as a way to effectively provide retail investors with the equivalent of thematic ETFs, right? So crypto doesn't have ETFs. Like, it's been a running joke for years that the Bitcoin ETF is just around the corner. We'll see every 90 days or so, there's another SEC review and then a delay. That's, and at some point we may end up with a Bitcoin ETF, likely this year, maybe early next year. But it will be years, if not decades, if not ever, where we have sort of broad index-like exposure via ETFs to this asset class. And even when we do, like, I think it's the wrong way to participate here. You're taking an asset that trades 24/7, 365, like we just talked about in March, and you're wrapping it into 9 to 5 banker hour traded vehicle. Like, those are incompatible. It's oil and water. So if you're going to participate here, you need to be holding these things natively, and you need to be working on a venue that trades 24/7. And so using that SEC RIA license, the Registered Investment Advisor license, we recognize that we can be that thematic ETF equivalent provider. So that was the genesis for Makara. We want to make investing here as simple as investing mutual funds, as simple as mutual funds made investing in traditional equities, or that ETFs have made investing in sort of a more diverse set of assets for people that are otherwise they're standing on the sidelines, right? We're trying to open this entire asset class up to a broader population that's not otherwise here today.
Yeah, I've got your manifesto kind of pulled up on the About section here on the screen. So while I'm going through this, and I think you did a great job explaining kind of the background there of the ethos that you guys kind of are driving this product by, what do those baskets actually look like? It looks like there's a wait list here. The product isn't out yet, and we actually have a wait list and sign up page here that I can link here. But what do the baskets officially look like?
Yeah, absolutely. So the concept here, like, people invest in this asset class for two reasons. One, the returns are compelling, and two, they're curious. And so we wanted to kind of combine both of those things and offer them in a mechanism where we could match investments to people's interests. So at launch, and we're targeting launch in the next couple of weeks, we have sort of our early AUM on platform now helping us in a beta. At launch, we'll have, I believe, 6 baskets. And those start with just simple things like there's a Bitcoin only basket. If that's what you want to get started with, or that's what you're holding, great. We're happy to help you with that. And I think there's people that are interested in this asset class just because they like Bitcoin. There's nothing wrong with that approach. We'll have an Ethereum basket for folks that are similar. And obviously with Ethereum's price action over the last couple of weeks, and with sort of these changes happening this summer, making ETH deflationary, like I think there's a lot of focus on that as a particular asset. So we'll start with those simple things, and that's not a complicated thing. You can get access to those anywhere. But the exciting pieces are the broader access, the baskets that give you broader exposure. So for example, we'll have a DeFi basket, and this gives you access to a broad-based selection of DeFi tokens without having to go do all the research and figure out what all of these individual pieces are. So think about this like it's a passive index fund to some extent. These are rebalanced on a quarterly basis. So every quarter, these are equal weight. The DeFi basket is equal weighted. Every quarter, the system will rebalance you back to an equal weight allocation. And then those allocations will float through the quarter. And it gives you a way really to get involved in this industry, into this asset class, without having to figure out each individual coin, like what is Uniswap versus Curve versus Aave. You can gain exposure to the entire asset class, or to that segment of the asset class in a very simplistic way. So those are kind of the simple ones. We'll have like a blue chip basket, for example, that's effectively large caps that'll be market cap weighted or equal weighted. We'll have a basket called the universe basket, which is literally everything on platform. So if you just say this asset class is fascinating to me and I just want to own a little bit of all of it, think of it like the Russell 2000, right? Like I just want all of it. How do I get all of it? We take that complexity out of the way for you. But the more exciting piece, so those baskets are all indexes. So they're going to track just what's happening in the market. Because we've spun this out of Strix, and because these baskets are based on this Octopus platform that we spent the last 3 years building, we can start to incorporate more actively traded strategies into these baskets that we're offering. So at launch, we'll have one called the Momentum Basket, and it's a Bitcoin Ethereum relative value trade. So effectively, we have algorithms that are looking at those two markets, and that will reweight you heavier Bitcoin or heavier Ethereum based on which market the algorithm believes will be performing better sort of in the forward-looking future. So it's a way to sort of benefit from some of the technology and research that we've done, and to take more sophisticated trading strategies that otherwise you sort of don't have access to as an everyday investor, and to make them accessible.
Yeah, for those people who are interested in that piece that you just touched on, which is basically utilizing tech and everything that you guys have working at Strix, and being able to say, hey, I'm going to hop into this app and be able to utilize all of that stuff. So for someone that's interested, I just dropped the link there in the live chat if you guys want to check it out. What is the roadmap for actual launch of the product? Again, I see the whitelist on the website. I know there's a sign up there. When were you thinking about rolling this out for initial maybe alpha or beta, or just doing a full launch?
Yep. Yeah, absolutely. So we're going to gate release like Clubhouse did, just to make sure that we can deliver things appropriately. I think we've all seen the different crypto companies over the last 3 or 4 months that have had horrible support issues or onboarding issues. Like, experience and customer service are tenets of this offering. And so we want to make sure that we can really deliver that to each and every customer as we bring them on. So right now we're in early beta with some of our investors. They have capital on platform, investing in the baskets, and we're sort of figuring out all the final nuances and tweaks there. Looks like towards the end of the month, we'll have the actual app release in App Store, and then we'll begin pulling people off the wait list at that point in time. Neat thing about this wait list is that if you sign up today and you're on the, you end up on the end, you could refer your friends and move your way up the wait list. So you don't have to, there's an opportunity to participate here earlier than just sort of taking your place in line and waiting.
So you're saying I should have dropped the referral link there instead of the actual link. Damn it.
Whoops.
Okay, yeah, that's a big whoops. Guys, Jesse is an amazing, obviously he's an active trader. He's an amazing investor. He's one of the only guys on this channel that can, I think with the SEC approval, say investment advice. This actually is investment advice. I can't say it, obviously, here on the channel. But for those of you that have questions about maybe the markets that are happening right now, we're seeing obviously that ETH is pulling above like 4,200 at this point. So we're seeing a lot of action there. Jesse's an amazing investor and he has a great mind for it. So if you guys have questions for him, please, throw them in the chat there so I can get it to him and we can have an interesting discussion. So I guess some of the last questions I had here about Makara, Jesse, is your emphasis on education and what that looks like on the platform. You were talking with, I think, Pomp, and I was listening to that interview, and you made the heavy emphasis on trying to get people to not only invest in some of these cryptocurrencies, but actually understand what they're holding, as opposed to just saying, hey, I'm holding Doge, and I don't know what the hell Doge is. Elon's saying, go up, and that's why I'm holding it. What does that look like on the platform? What does education look like there?
Yeah, we should talk about the Elon thing in a moment because I just think it's hysterical. But so education is a huge part of this, and I think we're figuring that out over time. But the goal really at the end of the day is how do we take effectively a foreign language and translate it into speak that everyday human beings can understand. And that's the fundamental challenge of this entire asset class. Like we talk about DeFi, for example. If you walk up to the random person on the street and you say DeFi, like nobody's going to know what you're talking about. And even though we're decentralized finance, like it's not descriptive about what happens here. And so our objective within Makara, it's how do we distill this information? How do we make it clear and concise and comprehensive and understandable so that people that are investing in this asset class can go and really explain it to their friends. They can go to when the office reopens, they can go to the water cooler and let their coworkers know sort of the little snippets that they've learned about over the weekend. So we'll do that. I think there's a lot of writing that exists all over on these things. And I think for some people that works really well, but video content, sort of short form video content will be a big part of this. And, we've got, again, kind of long form video content all over the place that's helpful here. But the objective is on my way to work, while I'm sitting at a stoplight, I can watch a 30-second video and understand something about this asset class that I didn't know before and feel enlightened and feel like I can go share that with folks that I know. And if we can do that sort of day in, day out and make people more educated about this asset class, then I think, again, we're doing our job. We're winning.
Absolutely, man. I love that ethos that you guys are running with and definitely want to get on this wait list here for the app. So the last piece here about Makara, I did want to touch on kind of the user statistics as you expect them here in quarter two, at the end of quarter two, and then into quarter 3 and 4. What does success look like for you guys with kind of a retail app? I know that looks entirely different again when you're dealing with institutional investors and things like this. What does a retail app success look like for Makara in 2021 for you guys?
Yeah, this is the fascinating part about building an actual product versus the fund. It's just such different. Sort of the economic models, the growth models are so fundamentally different, and it's kind of it's exciting, right? There's just it's a much higher volume of interaction than I think we're used to historically. I think we have pretty conservative goals. At the end of the day, we want to make sure that our clients that they're well supported, that the experiences meets our expectation. This is not a fly-by-night operation. I've built my entire entrepreneurial career on building high-touch, good experience businesses, and we want to make sure we carry that forward into this endeavor. So, I think it's a successful forward-looking year. Maybe it's 20,000 accounts on platform. I think we'll do much more than that based on what the waitlist looks like today and the ability for us to scale into these operations. One of the neat things here is that we've really spent a significant amount of engineering effort on the automation of this platform. And that's what's fundamentally different about this tech stack. Like, let's step back and think about Robo-Advisor in general. Like Wealthfront, for example, they didn't have to go build ETFs. They just had to go build the advisory part and the account management part. But because we don't have ETFs here, you have to build both sides of the business. And crypto doesn't have kind of the infrastructure for large scale separately managed accounts. So at Makara, we're non-custodial. As a registered investment advisor, by law, we have to hold your assets with a qualified custodian. Like we don't get to touch your money. So in this case, the qualified custodian that we partnered with is Gemini. So under the hood at Makara, when you sign up with us, you're getting a Gemini account. And we've managed all of the technical work to do that setup, to do all of the user identification, all of the capital flows, so being able to move money on platform. Like there is a significant amount of engineering effort that's gone into that side of the business because it doesn't exist here, like we discovered on the institutional side. And then we also had to go build all the baskets, right? Like there are ETFs for us to go use. And so we had to go design all of these baskets and get them up and running on the Octopus side. And so it's really this marrying of these two technology stacks that gives us this really fascinating platform to go deploy and scale into over the next year.
Yeah, the organizational structure is perfect in my opinion when you already have those other two entities set up and then they feed into what you guys are doing at Makara. So if you guys have any questions as far as the app is concerned, as far as automated robo-advisory, any of the topics that we just touched on, if you guys have any questions there, please drop them in chat. Otherwise, I do have some trading questions or investor questions as it's related to the general market here that I want to throw your way, Jesse. But before I get to that, I want to pull up your tweet about this episode here because this is the first time this has happened to me. Jesse's saying, come join me at 9:30 a.m. Pacific today with Nifty Q on the LADZ City podcast. We'll talk Makara Digital, moon exploration, and the startup grind. So wondering what I didn't get the memo, so I really want to talk about moon exploration here. What's going on with moon exploration?
So did you watch Saturday Night Live?
I did see a little bit of it. I didn't watch it in full.
Oh, you're probably better off for you that way. It's fairly painful. Elon is a good sport. The fascinating thing for me was then seeing this SpaceX Dogecoin mission. It's just, Elon is it's just a fascinating human being, right? I think you take somebody who has had sort of laser eye focus from the SEC over the last couple of years as a function of his tweeting from Tesla. And I think he's come to realize, like, because these are not securities, here's a whole world that he can participate in and play with and have fun with. And the SEC, like, I'm sure they're trying to figure out what they can do, and I'm sure there's something they can do. So I wouldn't like to be in his shoes, but it's just so fascinating to watch. And so you take somebody that has ability, like rocket launch abilities, to build the whole campaign around to build a whole campaign around a joke currency. It's just fascinating. I mean, the whole Doge movement, kind of watching it over the last couple of months, to some extent, it's like, I'm not a maximalist in any way. I think Bitcoin is a phenomenal technology and it's fascinating and it has a lot of structural advantages because it's first. But I think there are any number of things that could cause it tremendous issues over the next decade. And I'm certainly not the guy that's going to squirrel a bunch of Bitcoin away in a bunker somewhere and wait for the demise of the country. Like, that doesn't seem very appealing to me. So to watch something like Doge rise in market cap to where it sits today, I think it really calls out some of the comedy of this space. It calls out my original point that there is no fundamental value in many, or that there is opaque fundamental value in many of these assets, and that the value is really driven based on fear and greed, and everybody's valuation models are structurally different. We got reached out to by a reporter last week who was doing a piece on institutional Doge adoption, which made me laugh. And I'm sure it's happening. Like, I'm sure somewhere somebody is like, oh, it's now, it's on based on its rank and market cap, it's something that we need to think about. There's folks that are definitely looking at it or trading it. But it's just it's everything. It's everything that this asset class. It's everything about this asset class that I find hysterical, kind of wrapped out in one package, kind of poking fun at everything else.
Man, speaking of institutional adoption of other assets other than Bitcoin, obviously ETH is on the run. It's past 4,200 at this point. And we do have a question in chat. Obviously, someone had to bring it up. So Llama 6666 is saying, what do you think is driving the ETH price movement up at present?
Yeah, so I will say I can't give investment advice. As the Robo-Advisor, I know. I was just giving the investment advice comes from the baskets themselves. And I actually don't know. I mean, that's, again, one of, I think, the fundamental things about both Strix and the Makara offerings is that the objective here was to try to take sort of decision-making out of the fold, that we could derive decisions here off of algorithms. But ETH to me is fascinating right now, really is a function of this change happening this summer around the mining payouts and trying to drive gas prices down and effectively creating this deflationary asset. So if the argument is that Bitcoin is worth something because we've had this hard cap supply, everybody knows what that is. And now ETH is saying we're effectively going to start burning our supply. Like, to some extent, you could argue that ETH is harder money than Bitcoin. And so everybody that's been saying we should pile into Bitcoin because it is the hardest of decentralized currencies, now you've got to scratch your head a little bit and say, well, wait a second. Here's what's happening with Ethereum. And yes, there are thousands of arguments that you can make around why Bitcoin and Ethereum are different, and about the fact that Bitcoin obviously is more decentralized in many, many ways than Ethereum is, and about the rate of change of the protocol itself. But I think a lot of people don't care about that. I think a lot of people just look at kind of the headlines. They look at the bigger picture issues here. And I mean, this is the education piece, right? Like, this stuff moves so quickly, and to really dive down and understand all of the nuances around issuance schedules and around inflation or deflationary characteristics of specific coins, like, it's a ton of work. Nobody has time. Like, most investors don't have time to do that because it's changing on a day in, day out basis across 9,000 different assets. Like, it's too hard. So, but that's what I think people are kind of waking up and realizing that ETH is, if we think about kind of the market cycle where Bitcoin is now and where ETH was, there's definitely sort of a disparity in relative value in terms of how the markets have moved. And it doesn't take, in these markets and kind of looking at historical patterns, it's not exactly rocket science to identify that when those sort of disparate changes in price occur, that there's opportunity for price appreciation.
Yeah, we've seen ETH kind of take off from a network point of view as well, not just the price. Obviously, that's going to play into the price in total valuation when you have more and more people coming onto the network using it. I think Crypto Stamina puts it as a currency. So appreciate the comments rolling through. Are you giving
and you've got, like, the other factors at play right now? You've got the ETH2 proof of stake coming, and all of the ETH that's been locked up as part of that process, right? So that's just supply that's straight up off market. And I don't recall the exact stat, but there was a stat I read last week where it's a pretty material double-digit percentage that's no longer available. And so you get sort of a supply side crisis on the exchanges. There's just not enough ETH to buy, and there are more buyers that drives price up. And so you get that characteristic as well. And then the last piece that I think is interesting, if we look at the 2017 market, like, that was hopes and dreams, right? Like, everybody, all of those tokens were white papers. Really, nothing worked. Ethereum existed and you could transact there, but everything on top was kind of an idea. And here we are in 2021 with hundreds of really functional, fascinating apps actually riding on top of Ethereum and moving real capital and real user flow across them. So it's structurally just a different market. And I think a lot of people looked at Ethereum in 2017 and said, yeah, it rose as a function of the ICO boom and people sort of needing to purchase Ethereum to participate there. I think we're seeing people purchasing Ethereum to participate in DeFi today. Like, it's real, right? This is not a hype machine. It's a functional set of applications. And that's always been the fascinating thing about this asset class to me. It's like, I got started in my first business in 97. and it was a hosting company. So the internet circa 97, you had all these functional networks and kind of the use cases, the applications that were going to ride on top, that was all being discovered. Crypto feels the exact same way to me right now, right? Particularly 2017. Like we have all these networks and structurally they work and you can send and receive things. And so what do we do with it now is the question. And here we are in 2021 and there are all of these different use cases that have emerged. And you can make arguments whether they're actually valuable use cases or if anybody needs them, but they're use cases and people are using them. And so it's just structurally, it's a different landscape today than it was 4 years ago.
Yeah, I don't think there's a better example than what's happening in DeFi now, where you're actually having revenue producing protocols, revenue producing dApps, like you're saying. There's other plays in there, NFTs, layer twos. Where do you spend most of your time when it comes to trying to research these different opportunities when it comes to investing? Again, guys, not investment advice on the channel. Do your own research, all that jazz. But Jesse, like where are you spending your time right now? Is it layer twos? Is it looking at potential NFT plays? And that seems like a little bit out of your wheelhouse, but maybe you're an NFT guy. I'm not certain. So
I NFTs make me feel like my parents, like I don't know how to set the VCR clock. Yeah. It's the equivalent for me for NFTs. Like I am so confused in that whole landscape. So what I love about NFTs, like the whole concept of being able to prove digital ownership, that's what I love about this entire asset class. And NFTs, are sort of the latest evolution of that. That's neat. But you're effectively, in my eyes, with NFTs, you're proving ownership of a piece of paper that sits next to whatever you actually want to say you own. And the thing that you actually want to own can be copied a million different times. So it's a space that I am confused and not yet convinced on, which doesn't mean it's right. I was confused by DeFi originally, and that's turned out to be a thing. So, I think one of the things that I've really tried to do with Strix is be able to step back and not have to figure out, like, we're not fundamental investors. We're not going and looking at these different protocols. We don't invest further down than the top 15 on the market cap list on the Strix side. So the world that we play in, really, it's a game of liquidity. Like for us, we're looking where there is predictable liquidity in these different markets. Once you get really below 10 on the top 10 on the market cap, and you get into the top 50, top 100, that's where you really are at that point truly angel investing. You have to make a fundamental bet that what you are buying has some longer term value, because there is not liquidity in those markets in a way to actively trade them like we do with Strix. And so you have to get in, and you have to hold, and you have to believe, and you have to hope you're right. And so for folks that want to go dabble in those areas, I think my advice is think about them like you would think about composing an angel portfolio. When you compose an angel investment portfolio, you're investing in early stage companies, and most of them are going to fail, and some of them will turn out okay. And you're hoping to get one or two or maybe three that effectively return your old investment and more. And so, you can't just go buy a single asset and hope that that's the one. I really do believe if you're going to participate in that section of this asset class, that you need to build a diversified portfolio that you put some thought into.
I love it. So I've got Adriana in the chat from Cypherglass. She says you're a tech advisor for Cypherglass. So I wanted to give a quick shout out there. We had another question come through about Grayscale's eSolutions and other DeFi-based indices, on what your thoughts were there. I do want to touch on one thing before maybe we get into those questions. You mentioned defensive investing, and it really struck a chord with me. My co-founder, Crypto Buffalo, who's also a Seattle native, we were having this discussion the other night of the same kind of experience that you went through in 2017, 2018, where you make it through a bull cycle and your capital is increasing. Your capital is increasing at a rapid pace, and at some point, the mindset almost has to shift to being from being trying to chase the risk of really, getting the 2x, 10x, 20x runs, to saying, oh, I have a bag here that I need to protect. So take me through that process for you, and then what that means, and break that down for the people that are in chat, because I think they're really loving your insight here.
Yeah, it's a challenging one, and it's particularly like this is all a psychological game. Like all of crypto it's so much more psychological than I think I ever would have imagined getting in. And it plays out in real time, 24/7, and it plays out on Twitter, and there's all kinds of crazy personalities. And so it's a really big challenge. I think one of the things I've come to recognize is there's always somebody that's going to be doing better than you. Like you go to Vegas and you feel like you're doing well, and then the guy next to you or the woman next to you has much larger pile of chips or has a bigger bottle service. Like there's always somebody in the world and in life that's doing better than you. And so kind of recognizing that and being able to just focus on yourself and your own investments and why you're here. Like, I think that's really important. And so many people in crypto, they just chase other people, they chase other trades. I mean, that was me in 2017. I was blindly buying stuff that was being promoted on Twitter, and it was working. It worked great. I made a ton of money, and then I lost it all. Right? Like this entire industry, it's so challenging in that capacity. And as a function of 24/7 nature, I think there's such a emotional wear and tear that it puts on everybody. Like I've been in this space now for 4 years. I mean, it feels like I've been doing this for 40. I am tired. Like I am tired. And everybody, you talk to anybody in this space that's been doing it for multiple years, like everybody is just tired because it doesn't stop. There is no vacation. There's no break. And so as you think about and construct your own portfolio, like those are the considerations that you've got to make. Like money doesn't do you any good if you're sick. Money doesn't do you any good if you're stressed out. Like ultimately the most valuable thing in life is time. And that I think is what everybody's trying to shoot for with earnings here. Like if we can earn money to give us freedom and flexibility of time, then we're all in great shape. But if you're sacrificing health or well-being or your body in sort of that conquest, it's not great. And we see that all the time in this in crypto Twitter. It's unfortunate. So it's not really investment advice, but it's like take care of yourself. Like be defensive. Don't. You don't have to kind of swing you don't always have to be constantly swinging for the fences.
Yeah, I love that advice, man. I think you hit it right on the head. So I'm going to touch on these other comments here. We touched on DeFi based indices a little bit. What are your thoughts on kind of the DeFi, I guess what the question is, DeFi based indices, what are your thoughts there? But maybe in a personal aspect as much as it is with Makara as well, whatever DeFi baskets we might see in the app. What are your personal thoughts as well?
Yeah, I mean, I think baskets are great. Like if we do them on chain or off chain, like it's phenomenal. At the end of the day, I mean, the objective here is how do we make investing easier? I think from our perspective, it's like the last thing the world needs is another crypto exchange. Like, I don't think we need more DeFi index protocols. And so we've kind of shied away from there, but I think they're phenomenal, right? I think that the objective of trying to make investing in this asset class easier, anybody that's working on that objective, I think is in my book is doing the broader industry a service. Our thesis is that you take a brand new investor to this asset class and you tell them, all right, first you go to Coinbase and you buy some Ethereum and then you put it in your MetaMask wallet and then you go to this other place and you send it over an on-chain transaction. And then you put it in this basket and then nobody's going to do that at all. It's too hard. And so from increasing sort of the number of participants in this market, that's why we think sort of these centralized investment baskets make sense. We're trying to make that initial experience as simple as possible. And then our belief is that over time, those folks, they'll become more sophisticated market participants, and we'll be able to increase the sort of our product offerings in a way that allows us to get folks different types of exposure. And one of the really, I mean, going back to that regulation topic that we've talked about, like this has been a fascinating one because DeFi is moving faster than the regulatory landscape can keep up. So as a registered investment advisor, right, I mentioned we have to work with a qualified custodian that actually holds the client's capital. Nothing on chain is considered qualified custodian. So investment advisors can't sort of put capital on chain. You can't go participate in yield farming or these indexes. At some point that'll change. I think at some point organizations like ours can go work with regulatory bodies like the SEC, and we can figure out a way to allow investors to participate in those types of protocols and technologies inside of the construct of a registered investment advisor. But we're not there now. So yeah, at the end of the day, it's like let's make this entire asset class easier, both for people that are already here and understand it, and for new people, and benefit everybody.
Man, that will be the day. I mean, there's so many new things each week that comes out that just blow your mind, saying we're here. Like that is an actual thing on this timeline. I mean, you talked about Elon Musk already with Doge and everything he's doing there, but having institutional grade investment companies and funds say, hey, we're going to throw $1 million or $2 million into bakery swap and do this yield farming. Like,
well,
God.
this is where, I mean, at some point the industry has to grow up. Like,
yeah.
We like the food token mania. Like, at some point, it doesn't work. Again, it's fun, and when people are making money and like pickle coin and but it's just at some point if we want to think of a broader audience, and if we want to think of how do we bring regulators to feel comfortable with this asset class, we need to be able to have assets that are presentable to those regulators. And it doesn't mean you can't have fun. Like, I think we can do both.
Yeah.
Not everything has to be serious here, but there needs to be a balance and a mix.
Yeah. Now that we're like talking about it out loud, it seems like the first move is probably with a protocol like Aave, for example, that's doing it really first class. How much of the emphasis is on Aave to handle their side so that you guys can participate in that platform?
Yeah, we haven't spent any energy here yet. In all honesty, looking at the Unchained stuff, I think our focus has been let's get the qualified custodian model working, and let's get clients aboard, and then we'll transition into sort of what does that next step look like. Like, we have all kinds of ancillary product ideas that they can go, they could be in addition to just the investment advice that we're giving, and certainly on-chain components are a big part of that. But again, that's going to require a pretty serious collaboration with the regulators. And if there's anything I've learned over the last 4 years, that takes time.
Yeah, 100%. We're definitely putting the cart before the horse a little bit on some of those questions. So we've got some of the, I guess we have some more members here that are asking questions. I definitely want to hit them. We're about 46 minutes in, so I want to let Jesse get out of here within the next 5 to 10 minutes. But definitely drop your last set of questions there, guys, so we can talk with Jesse about it. I probed you with the NFT question first because I wanted to hit you with the social token question next. I'm sure I'll get a kind of the same response, but we did have Asmodai in the chat saying, should we have a social token index? I guess I can frame that question and say, what are your thoughts on social tokens as they exist now, and maybe, in the future when all that stuff gets handled and it looks kind of more proper, if you will?
Yeah, I mean, I shouldn't say anything because I'll put my foot in my mouth on this one. Like, it's just an area I haven't spent enough time looking at. I love the innovation. I love people coming up with new ideas and new ways to use this notion of digital ownership in a way that can be beneficial. Like, that's really neat. But beyond that, it's like, I don't feel qualified to make a comment, so I should just not make a comment.
Yeah, absolutely, man. Yeah, leave the degenning to us. You can worry about the top 15.
So much of this asset class is people that have no idea what they're talking about making statements. It's like we need more people saying, I don't know.
Sounds like you've been in Clubhouse.
I have avoided Clubhouse like the plague. I guess the last thing I want to do all day long, I talk to people on calls, and the last thing I want to do is get on something where I listen to more people talk. So I legitimately feel like the old man, like with the VCR, can't program it. Like, I don't get any of this stuff anymore.
That's really the dichotomy with something like Clubhouse. I mean, we're getting super off topic, but guys like you should be the ones on Clubhouse, but it's not guys like you on Clubhouse. It's people that, just got in the space 3 weeks ago that are talking like they are you. So definitely a great episode here, man. I appreciate all your insights. I think we are done with the community comments and kind of done with most of the interview here. The last question I'll throw at you from the community is, will the future of economies be based on memes?
We're going to conduct all of our board meetings in memes. Like, that's my objective. I don't know. Like, I think it's fun to have fun, right? Yeah. I think if anything, like, particularly over the last year, this has been such a hard year for everybody around the world, and everybody just needs a laugh. And so if we could bring some humor and happiness into life, and we do that through memes, like, by all means, like, let's do it.
Absolutely, man. All right. Well, this has been phenomenal. Thank you guys for participating along with us here on the Layer 1 podcast. We're talking all things Makara and obviously other things as well. So, Jesse, as far as Makara is concerned, is there anything we didn't hit? Do you want to give any links potentially on where people can find more information?
Yeah, absolutely. I mean, we covered it. I mean, we're just really excited to bring this product to market. And the most exciting thing, I think, has been watching the feedback we received as a function of this waitlist. So obviously, you can refer your friends to move up in the list itself. It's just neat to see people actually doing that, right? Like financial services are not something that's that everybody's comfortable sharing. And we've been thrilled to see how excited people are about this product, and really to see sort of the gap in the market that's been missing that this solves. So thrilled to get it to market. We're all working. We're working 120% to get this thing live and in your hands. You can check it out at Makara, Makara digital, digital.com. Obviously, the link will be in the chat or in the description. Look forward to having you join the waitlist, and look forward to getting you on platform here as quickly as we can.
Awesome. Yeah, I've got that link there pinned to the live chat as well, guys, so you can check it out. Last question here. Book recommendation. Could be crypto, could be non-crypto. What do you got?
Book recommendation. That's a tough one. I should have thought about it beforehand.
You got all the time in the world.
So I just read this book. I'm going to forget the title, so now I'm going to have to go find it and give it to you. So I think it's called The $1 Billion Whale. Have you heard about this one?
No.
So it's about this guy from, I believe, Malaysia, who ended up embezzling like hundreds of billions of dollars with like involvement from Goldman Sachs. And fascinating read. I'll get you the exact title afterwards. You can put it in the link. But man, you want to talk about, like, everybody says, oh, Bitcoin's used like for fraud and drugs. And then you can read a book like this and you realize just how much money moves through the traditional financial system in a fraudulent, nefarious way. And you're like, duh, like head explodes, like orders of magnitude difference here. So I believe it's called The $1 Billion Whale. I'll go dig it up for you.
Awesome. All right, Jesse, thank you again for coming on the Layer 1 podcast. Great insights there. I'll definitely be checking out that book. Everybody in chat, thank you so much. If you want to catch the episode, obviously it's going to be here on YouTube afterwards, and we also go on audio platforms. So any places where you listen to your regular podcast, Spotify, Apple Podcasts, all these things, it'll be available there as well. So thank you guys so much. And Jesse, thanks again for stopping by.
Appreciate it. It was a great day.